Hello everyone, welcome to another interactive session from AKC Capital. This time we'll be covering the microcap space, and it's a pleasure to have Mr. Bhargav from Ambit Asset Management. He's the director and the fund manager for the Ambit Micro Marvels Fund. So I'll have a slew of questions for you as we go forward. Thank you so much for joining us.
Thank you for inviting us, Aditya.
Yeah. So maybe we can start with the first questions. If you can, tell us a bit about this fund and why focus on microcap space in general at this point in time.
Yeah, so I have spent almost 20 years in this industry.
Right.
And of which last 6 years I've been on the asset management side.
Right.
What I have seen is that the asset management business is more inclined towards asset garnering.
Yes.
So we wanted to sort of come out with a product where the USP is not asset gathering,
right,
but return maximization.
Okay.
So microcap is a product where you can't raise 2,000 odd crores.
Yeah.
So herein we are restricting the AUMs to about 450 to 500 crores.
Okay.
And we earn only if the client earns.
That's right.
So the idea is to not earn from the AUMs, but to sort of earn from the variable fee,
right,
which is linked to the overall return of the fund. And just to make it more unique, we've seldom seen asset managers return the money back. But
right,
in this, we've said that we'll return the money back.
Okay.
And to make the product scalable, we'll come out with a series 2. So that's a brief about microcaps.
Okay. Brings us to a very pertinent question, is about valuations, right? Yeah. So I was just kind of going through the portfolio, and I think the valuations currently are 21 times FI26.
Yes.
While if you see most of the portfolio companies have been growing at a much higher 25% CAGR. So how do you kind of keep the valuations at an optimum level?
So Aditya, what happens in this space is that typically these are very undiscovered companies.
Okay.
So not many people know about them. Just to give you a mathematics, the average market cap of the microcap fund is about 2,000 crores.
Yeah. Okay.
And if you look at any small cap fund in the mutual fund industry, the size is in excess of 15,000 crores.
Yes, that's right.
So if you have to buy 1% in a 15,000 crore AUM, you need to buy 150 crore worth of shares.
Right.
Now in a 2,000 crore market cap, you can't buy 150 crore worth of shares because you will end up owning close to 5% of the company.
Right.
So therefore, many of these companies are not discovered as such, and hence they are available at a bargain.
Okay.
Now, a company growing at north of 25% consistently with a very strong balance sheet,
right,
and available at 1 year forward valuation of 21 times, you will not see these kind of characteristics being very common across several portfolios in mutual funds. So we thought that it's very interesting to sort of get into this game because we can easily buy these companies because the AUMs are closer to about 400-500 crores.
Right.
So just buying about 5% of that fund, we need to deploy just 20 crores, which is very much possible in a 2,000 crore. And as these companies keep on growing, what you will see is that the valuation multiples will start getting re-rated.
Right.
Because as the companies keep on compounding at 25% earnings growth, at a 5,000 crore market cap, maybe 3 years down the line, 4 years down the line, mutual funds may want to enter into this segment. And that's where the valuation re-rating will happen.
Eventually, you discover them at an early point, and then eventually these will grow to become, a mid and large cap in the future. So actually the mantra here is very clear: to catch them, discover them at an early stage. Which brings to the next stage, that microcap typically is an undiscovered basket. So, so how do you really spot these opportunities. And if I were to add one more pertinent question, is that this space typically would be under researched, unlike
Yes.
large caps where you are tracking by multiple
Yes.
analysts and there's a lot of data. This is just the opposite space where
Absolutely.
you don't have adequate research, you don't have analysts who are tracking these.
Yeah.
So how does your team strength internally help you discover these gems?
That's a very interesting question in terms of idea discovery. So what we do is that we tend to meet many mid-cap and large-cap companies.
Okay.
And in a general conversation, we keep on asking them that who are the vendors or the suppliers with whom you are dealing.
Okay.
So typically the vendor or the supplier will be a microcap company.
Okay.
Generally how it works is that I'll just give you a simple example. So if it's a large plastic pipe company,
right,
their job is to set up manufacturing facilities across the country, set up a strong distribution network. But the R&D part is generally given to a smaller company. The reason why the R&D part is given to a smaller company is because that's not very capital intensive.
Correct.
So the idea of a larger company is to deploy the excess capital into the business growth, into sales and distribution, rather than product development. So outsource the product development to a smaller company. And why will this smaller company be able to do this? Is because they hire global scientists, they give a stake in their company, and that's how these smaller companies tend to grow. So the addressable market for a smaller company will not be as large as this large plastic pipe company. But for the size of that smaller company, the addressable market is good enough for them to pursue this. So one of the ways we identify is by meeting their customers.
Right.
So that's the first leg in terms of identification. Second way of identification is obviously we use our screens. So we run a database. And we don't look at the top 500 companies by market cap. We simply remove that from our filters. And we look at the 501st to the four important parameters. One is the balance sheet, that the balance sheet has to be debt free. Second, the promoter shareholding has to be majority, because these are very small companies. Literally, you sleep with the promoter when you invest in such companies. Third, we want to invest in oligopolistic kind of companies. So India has a benefit of having several subsectors within the overall manufacturing piece. For instance, if you look at bearings, within bearings you have a specialist sector called bimetal bearings, where there are just 3 companies. And the addressable market in India is just about $1 billion. So what happens is that India is blessed with an ecosystem where you have many such oligopolistic smaller manufacturing companies, which you tend to sort of identify by meeting their customers, and second by running screens. And the last bit is that what we also do in order to identify is that we meet the channel ecosystem. For instance, when we go to a market where we want to meet the dealer, the distributor, we keep on asking, कौन सा नया company आया है, जो कोई disruption कर रहा है in the industry. So just to get a sense in terms of how to identify. So it's a process. It's a painful process. But it's worth the money, because if you can get the right company, then typically you tend to make good money. So there's a very interesting statistics that 35% of microcap companies tend to become either a mid-cap company or a small-cap company. And when the transition happens from a microcap to a small cap, you typically end up making 30% CAGR. And when it goes to a mid cap, then the CAGR goes up. So it requires some effort, but you need a lot of passion to sort of do this.
And I think what's the team strength currently you have to support you in the analyst?
So we run a very concentrated portfolio.
Okay.
So our portfolio across various market cap buckets is about 20 to 25 companies.
Okay.
So we have a very capable research team of 6 people.
Okay.
There are a bunch of chartered accountants,
Sure. Interesting.
MBAs.
Great.
And very driven in terms of learning. So we don't need a very big team, and also we deal with several brokers.
Right.
So obviously we take help of
Great.
several brokers in the investment and research.
No, thank you. That's very insightful for our viewers. I think clearly we have looked at the processes and the steps which are being used to filter these companies, and if I can articulate them, a couple of things which really stand out are promoters' skin in the game.
Yes.
You're looking at the balance sheet, and then, and I think a key component which really came forward was that when you're talking to the portfolio companies, through that network, you actually come for us who are their suppliers, and then you find that typically these would be in a microcap space, and then you look at the customers. So there's a whole process of due diligence where you're following and supported by a team with a very focused approach with the right capabilities, and I think that's makes the difference. Which brings me to this next question is that typically when you look microcap space, I think one of the things which comes across always as one of the filters is corporate governance. Right? So given that this is a very nascent stage, how do you really would ensure that corporate governance is kind of broadly taken care of? Any checks and filters?
Yeah, so that's a very interesting question, because when we were raising funds for microcaps, this was one of the most pertinent questions which investors asked. How do you ensure that there is no accident as such in the portfolio? So we spend a lot of time to work on corporate governance. So there are 3 main aspects we look from a corporate governance. One is we look at the independent directors on the board. So typically, if you want to catch corporate governance, if it's a group of companies, generally the independent directors are common for several group companies. So we generally don't like that kind of a structure. So what we look at first is the independent director, and more importantly, for how long these independent directors are. For instance, in a few companies, the independent directors are for ages. Which essentially means that as such they are independent, but they are not independent in the right spirit. So we look at that. Second, we look at last 10-year history in terms of the commentary given by the company in the annual report. So generally what happens is that in the annual report, the management will give a vision that I want to become XX revenue company in the next 5 years. So we look at how has been the comparison between the delivery and the execution. So that gives you a sense in terms of how credible the management has been in the past. And the third thing we look at is capital allocation. So generally we like companies which are asset light and which fund their capex through internal accruals. Which effectively means that the portfolio should be debt free. So if you look at Micro Marvels, the net debt to equity is about 0.23. So
that's fairly low.
Which is fairly low. So that takes care. Generally, what happens is that capex is one of the biggest areas where you can play around with pilferage. You can sort of over invoice, and that's one of the because I've been a chartered accountant in my previous role. I used to do forensic accounting, so that is one of the favorite mediums to sort of remove cash. And within the P&L, we look at the most irrelevant item, which is other miscellaneous expenditures. So nobody looks at that item, but we tend to look at how that has been growing and what is the correlation with revenue. So these are slight nuances which we look at, but importantly, the corporate governance is very, very important because, and especially when you run a very concentrated portfolio, And you
Becomes
rightly
also
pointed out that that is one of the thing, microcaps.
No, I think that's a very different perspective, on which you want to look at corporate governance. And just to summarize, we've talked about the role of independent directors. You've talked
Yes.
about the annual reports, what's their vision for the next 10 years. You've talked about companies being asset light, almost very negligible debt to equity ratios, so on and so forth. And one thing which really stands out in a lighter perspective, you brought out forensic accounting.
Yeah.
And that's something close because I worked in KPMG in earlier part of my career in forensic accounting for a couple of years. So I do understand the importance of that, especially when you are looking at corporate governance. And I think that's important.
Yes.
Which brings me to the next question, and I think as a Q&A goes along, this becomes a lot more interesting and insightful.
Sure.
So when you look at larger institutional investors like mutual funds, they generally do not invest in this space.
Yes.
So what's your view regarding that? And obviously, Ambit has taken a kind of a contrarian call to kind of look at this space and
Yes.
forward. So any views here?
Yeah, so typically I think you are referring to idea generation, that how will these ideas be discovered. So what we are doing here is that effectively that part of the process also we are trying to do by ourselves.
Right.
So we had a huge debate in terms of how should we get these ideas discovered within the team.
Right.
So there were various suggestions that we should do webinars, then write long research reports. But finally, we thought that this is something which everybody does. So why not create a brand around the way we communicate our ideas? So we came out with this novel sort of idea of writing a very comical kind of a note, so that it becomes readable as well. So
I think let me take this for our viewers and let me do this
Sure.
with you. I think one of the things I think which Ambit is doing differently is to how to come out with an analyst report vis-a-vis the microcap space or the in the portfolio companies. And as you can see, this is represented beautifully. It comes in a very comic avatar, so it makes it easy to read. It's not a heavy dose. And as you after gone through a couple of these reports, you can see that you have these comics things, but comic pictures, and then you've started to talk about these companies with a very optimum blend of text and research, and then conveying the same idea on a similar page, adjacent page, which is more like a compendium or a kind of a summary of the key points which you're having here. So this is a beautiful way because visually you remember a lot of things which you see, and you have a lesser recall of text from a human perspective. So there's a beautiful way where you can get the core idea about what these companies do and why the investments have been made and why these are part of the portfolio and the underlying structure. So here we've taken a small idea about margin levers. It's a great idea, and then we've kind of talking about let's say about the sector, manufacturing, POF, right? And in this one we've kind of talked about a company which is Ice Make Refrigeration Limited, and there are various nuances about the same. So I think this is an industry first. Personally, I've not come across a representation in my career. I've been in the private banking for 20 years plus now. So this is a very unique and a different way to make a representation and talk to to clients and sell the story about why the company is part of the portfolio. So I think it's a great work, and my congratulations to the analyst team for doing a wonderful job.
And what made our day is when we met one of the companies on which we had written. So the promoter said that my son was having his dinner, and post the dinner he managed to pick up your note. I had brought it at my residence,
Mm-hmm.
and he said that I want to join your company. You do such fantastic work.
Right,
So
right.
far, the dad was working very hard. The son was never interested in joining
Right,
his
right.
business.
Mm-hmm.
And he said, I read through the entire note and I find your business really inspiring. So this comical format sort of at least want you to take a look. That is what we wanted,
Right.
because you will remember your old Tinkle days, your asterisk
yeah.
days, and superhero is a theme which generally goes well with the millennials and the younger generation. So that really made our day, that the promoter said, मेरा बेटा कभी भी मेरे धंधे के बारे में interested नहीं था,
Right.
but ये पढ़ने के बाद उसको interest आ गया. So
Yes, yes.
we thought that we'll continue with this journey, and maybe in the next 15 months we'll write on all our companies, and hopefully as more and more people read, more and more people know these businesses, and that's how the 21P sort of gets re-rated. So,
And if I want to summarize this for viewers, I think generally, financial jargon
yeah,
and technical analysis
yeah,
is perceived to be very tough or
yeah,
not easy. So I think ideas like this, when you're talking a comical presentation, is to make the whole understanding a lot more simpler, easy
Yes.
to understand. And I personally take that view from my long-term career of wealth management.
Yes.
I'm of a personal view that when we are talking to our clients, I think whether it's about asset allocation, whether it's risk profile, risk-adjusted returns, I think the communication should be very simple,
yes,
easy to understand, which the client can comprehend.
absolutely.
If I wear a technical hat and talk about all the ratios and the technical formulas, we will lose the client. Okay, so it's not easy. I guess an analyst wears a technical hat, but we basically business development guys who are on the sales side and who are in the client side do need to blend this technical and bridge the gap between technical and making it easy to understand. I think that's a core skill set.
Yes.
And I think that the teams here are doing amazingly
So
well.
one thing people generally miss out is that the industry is also about storytelling.
Storytelling.
I mean, if you can communicate the story in a very effective manner,
Right.
then generally the resonance of that stays for long. So
Fair enough.
it's similar to like the bedtime stories we used to have in our childhood days. Those still resonate in our minds.
Still
So
resonate.
if you can communicate the story in an
Good.
effective manner, people tend to and keep it very simple.
Yes.
So that and also have the details, like you mentioned, that the left-hand side of the page is a brief synopsis and the right-hand side is the detail.
Yeah,
So that you try and address the maximum.
So this was very insightful. It brings me to the last two questions for the sake of time.
Sure.
I want to keep it short so that people don't get bored here. And the last two questions is that typically, would it be fair to presume that investments in the microcap space would be a good alternative to unlisted oblique, private equity kind of space, and secondly, do you invest in SME stocks, either as an extension to that question? And typically, because this space would have inherently low liquidity,
Yes.
how do you manage?
6 years. What we have seen is the risk appetite for HNIs, which is high net worth individuals, UHNIs, has increased a lot in India, which happened decades back in the US.
Yes, yes.
So now on your general weekends, you tend to discuss many startup ideas. Thanks to Shark Tank, investing in startups is now a fashion. Sort of. So there's a lot more awareness around taking risks, and investing in that space. So microcap, which is investing in small cap listed companies, is very similar to that. So these are very high growth companies, undiscovered, not many people own it. So the traits of investing in a startup and microcap is very similar. The only advantage you have is if there is an accident, you can exit. Given that it's a listed company. And typically, we don't advise clients to deploy highest AUM in this space.
Right.
So to that extent, you are not taking that big a risk. If you are investing 100 rupee, we would suggest that invest 15 to 20 rupees in microcap, which means that liquidity angle will also be taken care of.
Right.
And that's where we decided that we'll keep a limited AUM fundraise,
Okay.
so that you can easily exit. So if you look at the average daily value of our portfolio stocks, it's closer to 6 crores or $0.8 million,
Right.
which is not that illiquid.
Right.
And we completely remove the risk of investing in SMEs, which
Right.
is the new exchange which has come in.
Right.
We only invest in NSE and BSE listed companies,
Okay.
which also removes that risk of illiquidity. And lastly, just to keep the client on our side, we co-invest in the fund. So
yeah, that's an important
almost
point.
10% of the AUM is invested by Ambit from their balance sheet and their employees. So even I have invested, my boss has invested, my super boss has invested, and most importantly, उनके बच्चों और wife ने डाला है.
Right.
So मुझे तो उनको जवाब देना पड़ेगा. So that's the most difficult part, right? So you should think 10 times before you take your boss's wife's or kids' money, because you will be answerable to them, which is not a very easy thing to do. So we made sure that before the fundraise, we first invest our own money, and that's where we show some skin in the game.
Right. I think that's been very interesting. Thank you so much. And as we just conclude this session, I would just like to close this with key remarks. Obviously, this has been a very informative session on microcap space, and I think this is a less talked about space. We have a lot of coverage on large, mid, and other aspects. So thank you for sharing your insights on this.
Sure.
Obviously, as from talking from a wealth manager or advisor perspective, I think it's always pertinent, like we say, that every client is different. So it's a function of risk profiling clients' financial goals, and when you do that, then as an asset allocation, you may consider microcap space as well as part of the overall portfolio. Again, like I said, right asset allocation, risk profiling in line with clients' financial goals, right? I think those are important aspects when you actually work on an investment plan or advise a client. But, so on behalf of AKC Capital, I would like to thank you, warm thank you note once again.
Thank you for giving us
taking on time out of your extremely busy schedule and giving us the time to talk to our viewers. I'm sure this will go a long way in addressing this space, and I'm sure it was very informative for all of us. Thank you so much once again.
Thank you. And just on a lighter note, I typically tend to give this example that if you go out for dinner, you will have your dal, roti, sabji, which is your large cap, mid cap, small cap.
Correct.
But in the end, you look forward to a nice dessert.
Right.
Though the quantity of the dessert is not that big, but the taste will stay forever. And if you don't get the right dessert, you generally feel the meal is incomplete. Microcap is like a dessert in your overall thali.
Right.
So the allocation may not be that high, but the return expectation or the return experience will make the entire memory worth it and long lasting.
So, absolutely, that's a brilliant analogy, and I think it's a perfect closure, and I'm sure and viewers will remember that.
But many thanks, Aditya, for showcasing microcaps. Not many people know about this product, so I'm sure your viewers will definitely enjoy, and hopefully the awareness around this product
absolutely.
Thank you very much for giving us.
Thank you so much, and thanks once again for everyone's time.
Thank you. Have a nice day.